The suggestion of new tariffs adds further uncertainty as the Fed prepares to meet this week. The chair, Jerome Powell, told Raghuram Rajan a few weeks ago it's unclear how the Trump administration's new policies will affect the economy.
These are very fundamental changes in, long held in some cases policies in the United States, and there's not any real experience. I mean, the Smoot-Hawley tariffs were actually not this large, and they were 95 years ago, so there isn't a modern experience of how to think about this. And businesses and households are saying in surveys that they are experiencing incredibly high uncertainty.
Raghuram Rajan is the former governor of the Reserve Bank of India, professor at the finance at the University of Chicago's Booth School. Good to see you, as always. Great to see you. Do you get the feeling that the Fed knows what needs to be done and is just dreading having to do it? In a sense that until it sees but it knows that if there is inflation, it can't cut, and it's just going to have to deal with, as the chair said, whichever is the more pressing crisis on the dual mandate.
Absolutely. I don't know if it's dreading and if it knows, but it certainly understands that it may be in great difficulty because on the one hand, you're likely to see growth fall off because of all the uncertainty, because households are pulling back, especially at the lower end. And on the other hand, the direct effect of tariffs is companies pass them on to consumers to some extent. And so you have higher prices. So does it deal with higher prices and inflation, or does it deal with lower growth?
Which would you deal with? You're a central banker or former central banker. Which would you deal with?
Almost surely I'll wait till I see a significant fall in growth. And that's part of the problem, that if the Fed attacks the inflation, attacks the growth problem when it's not significant, it risks reigniting growth. You see, part of the problem is that when you raise tariffs, you create snafus in the supply chain. For example, right now, we're not importing anything from China into the United States. And a bunch of parts aren't coming in, so those supply chains are snagged. You need this to play out, and you don't do it by cutting interest rates too sharply and elevating demand and ensuring the inflation persists. So you have to play it a little carefully. Wait till growth slows down, and then cut interest rates so that you can revive the economy at that point.
When we saw the Fed increase rates to squeeze out inflation, many of us, myself certainly included, thought, oh, come on, you can't have 8 rate hikes in such a short period of time and not have a recession of sorts. Well, I was wrong, as others were, because the resilience and the productivity gains in the US economy took us all to some extent by surprise. Is it likely that that resilience and AI productivity gains could prevent the economy going into a deeper recession against the headwinds of current tariffs?
Well, yes, it is too early for AI to come in a large measure. But you're certainly right that the resilience of the beginning of the year was on the verge of bringing the economy down into a soft landing. Certainly, as the Fed contemplates the future, it's going to wonder what it's missing. That's what you heard Chair Powell say at the beginning of our conversation. And so what they're going to do is watch and wait. Maybe the economy is resilient and continues and doesn't need the additional medicine of lower rates. Maybe it falls off a cliff, in which case the Fed can then come to the rescue, knowing that it's not going to trigger more inflation. So it's a wait and see. And unfortunately, right now, the pressure from the administration is for the Fed to cut rates, which means if the economy tanks, the Fed will be a little bit of a scapegoat.
The headwinds of tariffs never mind what comes next, never mind what exemptions there might be, just as you and I are talking now, there's 145% on China, so there's no business. You've got 20 and 25% on auto parts, steel and aluminium. You've got a general tariff rate of 10%, which is 3 times the previous average. That is a formidable headwind for the US economy to be sailing into, and it's happening while you and I are talking.
It is. It is a huge headwind because average tariffs have gone up from 3 to 23. But if it was just that, you could pay it. The problem is some critical parts are at 145, and as a result, you're not buying any more of them. And this is why, to my mind, the administration cares very much that there is a deal sooner rather than later. I think they've put out feelers to the Chinese. The Chinese aren't accepting anything right now. I think there's going to be a situation where both leaders sort of hold their breath to see who gives in first.
One final question I just want to put to you. Today we had Emmanuel Macron and Ursula von der Leyen talking about education, and the comment was made again and again, the short-sightedness of cancelling grants on science, cancelling grants on research. As somebody who's been on both sides of this is the long-term seed corn of the next few generations of Americans' advancement, isn't it? This investment in research, education. We won't see the effect of that for 20 or 30 years, arguably.
Well, I mean, you could do some forms of education which bite sooner. You put the finger on the nail here. The real problem coming towards us is service jobs, not manufacturing jobs. Service jobs which are going to be taken up by AI. And for people to actually deal with it, to preserve their jobs, some reskilling, some upskilling may be necessary. And for that, we need research, we need education, we need skilling. And that's very different from the important priorities of this administration so far.
I'm grateful to see you, Sir Raghuram. Thank you very much indeed. Look forward to talking more in the future. Thank you.